Welcome to our module on setting investment goals and developing a long-term strategy. In this section, we'll delve into the critical aspects of defining your investment goals, assessing your risk tolerance, and crafting a strategic plan that aligns with your aspirations. Identifying personal investment goals. The journey begins with identifying your personal investment goals. Take a moment to contemplate your financial objectives. Are you aiming for wealth accumulation, ensuring a comfortable retirement, or pursuing other specific financial targets? Remember, your goals will play a pivotal role in shaping your real estate investment strategy. Assessing risk tolerance. Understanding and assessing your risk tolerance is the next step. How comfortable are you with the uncertainties and potential risks of real estate investments? Your risk tolerance will significantly influence the types of real estate investments you should consider. It's crucial to strike a balance between your desired returns and the level of risk you are willing to take. Creating a real estate investment plan. Moving forward, it's time to create a comprehensive real estate investment plan. Think of this as the blueprint for your real estate journey. A well-structured plan should outline your investment approach, including the types of properties you want to invest in, the financing methods you'll use, and the expected outcomes. Defining short-term and long-term objectives. Within your investment plan, define both short-term and long-term objectives. Short-term goals might involve generating cash flow or achieving specific financial milestones, while long-term goals could revolve around property appreciation, equity growth, and wealth building over an extended period. Developing a strategy for achieving investment goals. Now it's time to develop a strategy that aligns with your investment goals. Your strategy may include critical decisions, such as choosing the right types of properties, selecting strategic locations, and evaluating financing options. This strategic approach is the compass guiding you toward your investment objectives. Importance of regular evaluation and adjustment of the investment plan. Never underestimate the importance of regular evaluation and adjustment of your investment plan. Real estate markets are dynamic, and personal circumstances can change. By routinely reassessing your plan and making necessary adjustments, you can adapt to evolving market conditions and stay on track to meet your goals. That concludes this module on setting investment goals and developing a long-term strategy. If you found this information valuable, please take a moment to show your support by hitting the like button. Share this knowledge with others who may benefit. And don't forget to subscribe to our channel for more insightful content on real estate investing. We greatly appreciate your engagement and look forward to having you as a part of our community.